Welcome back to part 9 of our 10-part series. I'm Hass, and today, gold and Bitcoin go head to head.
Fight!
Since we've done Bitcoin to death over the past few months, we'll give gold first shot on this one. Gold has been used for millennia as a means to both project and protect wealth. In terms of projection of wealth, as can be seen from the chart here, 52% of all gold ever mined is used for jewelry and palatial adornments. In terms of protection of wealth, central banks hold about 18% of the world's gold supply, and other investors about 16%. It also has practical applications, with 10% of yearly demand coming from industry, with almost 12% of the world's supply of gold held inside technological products. I'll quickly go through my findings from 2014 before we get into updates based on the latest data and additional new findings. I've linked the previous report in the description below for deeper reading and sources. Since the previous version of this research in 2014, which used 2013 data, world gold production has increased 18% from 2,770 tonnes to 3,270 tonnes in 2017. We've also witnessed a sharp drop in the amount of recycled gold produced, going from 30% of total annual production in 2011 down to only 26% at 1,160 tonnes in 2017. As you can imagine, the mining of gold is quite an involved process, and the 8 life cycle stages of a gold mine typically occur over a long time, many times upwards of 20 years. The costliest stages are the 4th, 5th and 6th stages: construction, production and rehabilitation. Mine construction provides the necessary infrastructure to allow for a productive mine, and rehabilitation involves returning the land to close to its previous pre-mining condition as possible. Although these activities have huge costs and impacts associated with them, they pale in comparison to mining production. Here you can see a blurry image of the typical gold production process. I'll aim to clear it up with some words. The ore is mined, taken to the plant for multiple runs through the crusher, get treated with a whole bunch of cyanide, and mountains of waste rock generated. Literally mountains. For the 3,270 tonnes of mined gold produced last year, about 5 billion tonnes of waste rock were generated, or around 2.5 billion cubic meters. This would produce a cone-shaped mountain with a base diameter of 1 kilometer and taller than the peak of Mount Everest. All this for a 6-meter cubed box of gold. Add to this almost 1 trillion liters of water, yes, trillion with a T, and about 500,000 tons of cyanide to leach the gold from the ore, and you've got a legitimate disaster on your hands. And this is before we get into worker deaths, conflict gold, emissions and other environmental impact factors. Recycled gold has a substantially lower impact than mined gold, but we'll run the numbers on both. I've linked my 2014 report in the comments below for those who want to see the real nitty-gritty. A very comprehensive study produced by Dell in November 2017 showed some fascinating information on the relative sustainability of gold mining and gold recycling. Just have a look at these numbers. It should be noted that Dell's 15 tonnes of carbon dioxide per kilo figures for gold mining exclude the construction and demobilization of infrastructure and site remediation. When including those, the original figure of 20 tonnes of CO2 per kilogram that we used in our 2014 research was a very fair estimate. Perhaps the best observation to draw from the Dell data is just how toxic and harmful gold mining is to the planet, even though it produces less than half the amount of CO2 per kilo. Before we get into the numbers though, we'll remind you that the average global emissions per kilowatt hour are 600 grams of CO2 and CO2 equivalents. Now that our previous 2014 for gold mining have been validated against an in-depth recent study by Dell, we can take a look at how the numbers stacked up in 2017. The next item to assess is the impact of producing mining equipment. To do this, we can look to the world's largest gold mining company, Barrick Gold, and the fleet and staff data they provide for their Pueblo Viejo Valadero open pit mine and their Barrick Nevada, Cortez and Goldstrike mine operations, which collectively produce about 107 tonnes of gold per year, or about 3.3% of the total supply. Having precise data on the machinery required to produce 3.3% of the world's gold, we will extrapolate the total weights found above out to the other 96.7% of the market. This results in almost 2.1 million tonnes of mining equipment. Despite this seemingly huge amount of equipment, surprisingly, few emissions come about from manufacturing equipment, with only about 500,000 tonnes of CO2 per year emitted from the manufacturing, packaging and shipping of machinery. Quite surprisingly, manufacturing of ASICs for the Bitcoin network each year produces dramatically more emissions. In fact, produces about 60 times as much, coming in at 36 million tonnes per year. Bear in mind that gold mining is just a small part of the wider mining industry, however. As we can see from this table, Bitcoin mining is dramatically less harmful than gold on all indicators aside from carcinogenics, where the global electric grid, that is, the sole unified entity powering the Bitcoin network, spews more than double that of the gold industry. However, as the electric grid moves towards renewable energy sources, Bitcoin's figures will continue to improve quite dramatically. However, there will be little improvement in the gold mining industry. From our study, it's clear that Bitcoin uses a substantial amount of energy, now closing in on the entire gold industry, and due to its reliance on the electrical grid, CO2 emissions are quite high. As the electric grid moves towards renewable energy sources, Bitcoin's figure for CO2 emissions will continue to improve, whereas, again, there will be little improvement in the gold mining industry from a CO2 efficiency point of view. That said, Bitcoin's energy use will continue to grow in line with the network's computing power growth and will most likely eclipse gold within the decade. Next week, we'll wrap up the series with a bit of discussion about energy use and future trends. I'll also provide an update on modeled cost versus price based on the latest data. I'd also like to thank Karim Kamar for his beautiful key work on the backing track. Check out his channel for a lot more great musical content. I've linked his channel below. And as always, thanks for watching. Click like and subscribe to our channel. Leave a comment below. Check out the links in the description for more info and references, and catch us on Twitter, LinkedIn, and Medium for more. Until next time.